Well, firstly, thanks a lot for having
Yeah,
having us. Really appreciate it. Handle is building effectively a multi-currency stablecoin protocol that allows users to borrow in a currency of their choice, which is not always USD, and it allows or it aims to add utility to a lot of non-USD stablecoins. One of those particular utilities is the creation of a spot or leveraged FX market. I guess it came from the genesis was as there was an ongoing proliferation of USD denominated stablecoins, which of course makes sense, and really, USD is the backbone of the global economy, and we understand that it's the backbone of DeFi stablecoins. But DeFi is a global opportunity, technology, movement, whatever you want to call it, and not everybody always wants to use US dollars. Not everybody always wants to settle a trade in a US dollar stablecoin. Not everybody always wants to make a payment or expose themselves to US dollar currency risk. Obviously, over the last period of time, USD has been very, very strong with what's going on around with interest rates. USD has been very strong with respect to most global currencies. So you certainly would want to hold USD versus other currencies, but that always hasn't been the case. And I guess, we see DeFi as it grows over time. It almost just makes no sense for there only to be one fiat, one type of fiat representative stablecoin. And as people probably know, they are starting to non-US dollar stablecoins are starting to get a little bit of traction and grow. And so effectively, that's the backbone of our thesis, that as DeFi grows, being a global opportunity, users will want to do things sometimes in their own currency or an alternate currency of choice, depending upon their views of the market and opportunities and strategies and all that sort of stuff. So that's really where Handle came from. Handle was a play on the name or on the FX term, trading at the handle. What's the handle? What price is it at? And therefore, that's where HandleFi came from. The founders of the project have got sort of 25 years plus experience in, let's call it TradFi, derivatives, trading, sales, asset management, hedge funds, in the multi-hundreds of millions of dollars type scenario. So there's a strong sort of financial markets background paired with a small but highly qualified sort of engineering team. We built the initial protocol around the minting and the borrowing of the stablecoins from ground up, and obviously that was a long process, went through various audits and etc. And we've also, as we've grown over time, looked for opportunities to create utility for our minted stablecoins, which I guess is where the leverage trading or perps opportunity came in. And yeah, so we're now at a point where users can, and really the opportunities or verticals we're going to continue to pursue are a user can borrow in their own currency or a currency of their choice, not always USD. A user can affect efficient spot conversions of our stablecoins and other multi-currency stablecoins. So we've built some optimized routing for that. Trade, hedge, speculate on leveraged FX markets, and also engage in liquidity provision through our HLP, our Handle liquidity pool, and our other FX keeper pools, which really are preferential liquidation pools as well. So that's a pretty rapid fire jump across who we are, why we did what we did, and what we're trying to build. Yes, I think that covers it.
Yeah, definitely. Yeah, I think you probably hit a lot of the things that now people have an understanding too of some of the things we talk about as we go forward. But yeah, a lot of experience there, which I think is awesome. And then a great rationale behind why you're building it. And that access, like you said, it's not like the U.S. dollar could, if blockchain, and all of this is supposed to be adopted worldwide, there's no way that USD could remain the only representative or only coin that's really represented. So, um,
Well, I
so
mean, that was definitely our early sort of thesis. And when we spoke to people initially, a lot of, I guess, US based participants sort of, are very looking at the world through a sort of a US myopic view, which makes sense. And there's no disputing the dominance of that. But, as a global opportunity, it just, as you've said, it just doesn't make any sense that they wouldn't allow users to do things in non-US dollar, um, fiat representative stablecoins. It's actually funny, when we first started, there was also a lot of, oh, you can't do FX on chain, it's too slow, too expensive, and so on and so forth. And obviously we've had um, you know, Arbitrum One. We don't do anything on Optimism, but as this layer two ecosystem has grown, that objection has fallen by the wayside. And we now have an opportunity to do reasonable frequency FX type trading. Obviously, still not super high frequency because of the costs, but a lot of those objections that were there early on are falling by the wayside as time goes on.
yeah, nice. Yeah, now it's just about getting enough people on the platform and enough volume to bring that revenue to really build out to the scale, right?
Yeah, totally. And I think
Yep.
we haven't achieved. We've been very, very strongly focused on building product, on building something that we think bridges the, let's call it, the Web 2, Web 3 divide. We want to build a really powerful user experience across the borrow, trade, convert, borrow, earn. And we often see a lot of these TVL games that go on, the optimization of TVL, playing into various token games and et cetera, and it's just not something we have engaged in. I think you see a lot of pools with a lot of TVL with very low utilization, and to me and to us, being from a finance background, that's highly capital inefficient. It doesn't make a lot of sense. If you want to be sort of capital efficient, if you want to play a game around pumponomics, then great. It's just not the way we roll. So our focus now is very much talk to users, continue to iterate and build our product out so that it's useful and helpful for traders. It allows traders to have efficient execution, fast execution, depth of liquidity, good reporting tools, good risk management. Provide them various avenues to get some alpha, all that type of stuff that matters to traders. And if we can do all of that, basically solve trader problems, we hope that we'll acquire users over time. And the more users we get, the more volume we get. And the more volume we get, the greater the utilization of our liquidity pools, and the greater the utilization of those. The higher the fees to the LPs, and the higher the fees to the LPs, the more attractive they become to LPs, and they grow, and you create that sort of the virtuous sort of cycle or positive feedback loop. But it really just comes back to building something useful that people want to use, and doing that well, and day in, day out, keep slaying dragons.
Yeah, I totally agreed, and that's a great approach. And I've seen some comments from some people who like your product, and their big thing is, well, they need to start marketing. They need to start marketing. So, I mean, you guys are starting to think about it, but I personally prefer a project that markets after they've built something that they can prove that people want. Not markets, or spends a heavy amount of their money marketing on the way up necessarily. So
We certainly agree with that, and we don't. We completely agree, and it's very much our focus now moving forward is sort of the concurrent, ongoing iteration of the product. But you can get to a point where you spend too much time building product and not enough time getting users and so forth. And I think we're very much at that point now where we're here talking today because we want to get the word out. We've got and so on and so forth. A whole lot of actions and activities are happening now to try to meet that sort of not we are aware of what people have said, and we take it on board and we understand that, and we want this to succeed too. So definitely more marketing is 2023, the year of the customer.
Yeah, I think it's a strong approach. So, so let's talk then a little bit more about kind of the project itself. So, why did you guys choose to be fully collateralized by ETH?
Well, so the fully collateralized by ETH is in reference to the issuance of the stable coins,
Hmm.
and it's really just the starting point. So, in other words, our intent very much is to build. Um, we've already built a capacity for our CDPs, our vaults, whatever you want to call them, to be multi-currency. In other words, to
Hmm.
accept ETH, BTC, and other various coins. But right now, I think given what's happened with a lot of with liquidity, with a lot of the altcoins, or other tokens, focusing on ETH as collateral for the issuance of our stablecoins is probably a good point to start with. Obviously, Liquidity have done a great job of that, just sort of singularly focused on ETH. But very much, over time, we would hope and expect that we would either be growing multi-currency vaults or more, I guess, some siloed or single collateral vaults to allow the issuance of, and we've done quite a bit of work on that in the back end as well. But really, ETH is just the first step um, towards growing more collateral and allowing users, I guess, to more efficient, give people options with collateral too.
Yeah,
And I mean, MIM does that. Obviously they do a good job of that. Um, uh, Liquidity obviously focus on ETH. So there's certainly and projects like MIM showed that there was a lot of demand for that. So we very much know that, and it's just a matter of time and resource, and only so many hours in the day, etc.
yeah, isn't that the truth?
Mm.
So how have you guys? What's your performance been like since you launched? I mean, compared to expectations. Like, what's your volume per day currently going through?
I think it's
Uh,
I think it's not even significant, to be really brutally honest. Right now, I think
mhm.
I don't think it's something that we'd go out and uh, yell loudly about. I think really what it's about now is just starting to get famous SR, I think by Web2 Paul Graham. Do things that don't scale. Grow
Mhm.
users, get one user, three users, five users, talk to people, make a product that they want to use and that they're happy with, and that's really our focus now, rather than there's a lot of fake volume happens in crypto,
Yeah, that's
uh,
true. That's fair.
and it's not hard to fake volume, and that's just not the way we roll. This is a product that we want to build as a. We really like what the GMX guys did. I just think they're good. And you can see the success that they've had because they were solid operators. They just kept building, and they had a lot of Oracle challenges early on, and they just kept trying to build something useful for people, and you can see the great success that they've had. So we would like to think that we could continue and doing, I guess, a similar strategy to them, and have some level of success. Not suggesting we would be that successful, but who knows? I mean, FX is a massive opportunity. I think that there's multiple perps players sort of popping up in the Arbitrum um, uh, ecosystem, and that's not a bad thing. I mean, it'd be worse if there was no competitors, because that'd show there's no demand.
Yeah.
And I think that having different participants really is of no. It's has more positives and negatives, and I just think you have to as well, from a competitor perspective, compare to TradFi. I mean, there is not one broker in TradFi. There is not one,
Mhm.
perps platform. There is not one sort of individual supplier of various trading products. There's a lot, and that's because
Yeah.
there's a lot of demand. And to me, I think the size of the opportunity in front of us means that having competitors is a good thing.
Yeah, yeah, I definitely agree with that. So, with your transition to kind of marketing and what you're saying here are your goals for onboarding, people to your platform. Obviously, that's going to come down to what you guys are doing on the platform. So let's kind of move into the key benefits, right? So what do you offer that other dexes don't, and what key features do you guys as a team find like the most appealing for users?
Yeah, I think right now the key for us, the differentiator, is the delivery of FX markets, and right now on Arbitrum, no one else does that. But there are others coming, and I'm aware of that. So really, and our sort of singular focus on providing FX markets over time, we think will be a point of strength for us. But I think additionally, the fact that we really have built an integrated product across, really focused on multi-currency stablecoins, not just perps.
Mhm.
An efficient reporting, with some real innovations in the way we actually represent and allow people to track the data across the Handle ecosystem, is one pretty unique feature. The capacity for users to borrow in a currency of their choice, the capacity for some of our optimized stablecoin routing that doesn't exist anywhere else, spot multi-currency stablecoin routing, and obviously, so there are lots of perps products, but there's no other products that really have that sort of breadth of sort of integration across the entire suite. And we're actually pretty excited, which we haven't talked about a lot, about our HLP, which is our the Handle liquidity pool, and that pool is effectively a not going to fork. I'm trying to find the right word, but basically that pool is quite similar to GMX's GLP in that it's a multi-asset liquidity pool, and it has some really nice properties that we think over time will become attractive to LPs. In that it is a pool that consists of 50% USD exposure and approximately 50%. I'll just connect this wallet here, and 50% multi-currency stablecoins. So what you end up with is a pool that it's really a global non-currency specific stablecoin pool. You're neither long USD nor are you short USD, because you own 50% USD and 50% DXY equivalent. So we think that's got some really interesting properties over time. If you compare it to a pool like GLP, where circa 50% of it is BTC and ETH and 50% is USD stables, and therefore you've got a lot more directional exposure. Some people won't want that in their LP provision. So if we can offer, high volume FX trading, generating decent yields on a pool of HLP, we think that's quite unique as well for LP capital providers. I'm
Yeah,
just
I
going
would
to log
agree.
in here. I'm just going to log in here, and this is again just things we've done to make the user experience.
Yeah, real quick, if everybody wants to click watch stream here, we're gonna walk through kind of, he's gonna show us through the platform basically, so you guys can see it in live action.
Yeah, so here I've actually used a different authentication method. We've integrated, allowing users to sign in with their own email or with Gmail, and again, the objective is to try to just make interaction with, Arbitrum, blockchain, crypto as easy as possible. So I was just gonna show us HLP. So you'll see here HLP, the composition is such whereby you've got about 48% in USD, 26% Euro, the rest in JPY, GBP, a bit of ETH, CAD, and other stable coins. So that gives LPs a certain type of exposure that we think would be attractive to global investors. And the HLP has similar properties to GMX's GLP, where it earns transaction fees, funding fees, and obviously takes the other side of traders' positions. So it could be subject to loss or profit if traders lose. Yeah, so logging in here, do you want me to just do a quick walkthrough or
Yeah,
of
absolutely.
a
Yeah, I'd like to see. I'd like
trade?
to see let everyone see the features and then kind of your structure.
Sure. So, yeah, so the starting at the dashboard, the objective here really is to try to, as you know, wake up, have a coffee, have some a Kickstarter at the start of the day, and you can see your position, what your volts are, transactions. Users will be able to customize this effectively, you know, in the sense like tiles, so you'll know
Oh, very
this
cool.
particular wallet's got $63 worth of assets. This is a test account. You'll know your total CDP collateral, your debt. You know, you can keep track of your trade equity, and this will grow over time. So our intent is you as a user will be able to specify what data you want to track every day. You may want to know the amount of VE4X staked, or you may want to know what your daily interest expense is, or you may want to know how many pool rewards you're accruing per day and your interest. So as a user, you can define the type of information you want to. You can still see it all if you drill deeper into the platform, but this is really just allows you to have a quick overview as to what you are, the information that's important to you. We started designing this and it just got so. Um, there are a lot of arguments about what should and shouldn't be shown and how it should or shouldn't be shown. And in the end, we decided, well, let's let people decide what they want to see and what they don't want to see. Anyways, so effectively a trade. I logged in using an email address, and I can talk more about that if people want the security around that and how private keys are managed and encrypted and abstracted. But trading experience, you know, this is analogous to really, you know, in some ways it's a fairly consistent process across different protocols with some other features that we intend to grow over time. But really, as a trader, you know, I want to be able to see price. I want to be able to, see
Mhm.
markets, engage in some sort of analytics or create some alpha or execute some sort of strategy for myself. And then when I get to obviously the execution has to be efficient, robust, fast, etc. So for our particular model, we allow the provision of a whole lot of different collateral types for trades. In this particular case, I've only got ETH in the wallet, so I'll select that as a collateral type. And let's just, for example, put on a trade. I want to go max long, ape mode. That uses all my collateral, but let's just say I want to go 50x long ETH. Pretty standard stuff. We've got a mark price here. We've got the liquidation price, fees for the trade, and buy. And if I click on buy, I get a confirm modal. Confirm buy. Transaction is submitted in the right hand side there. You get a toast for that, and transaction executed. And there's a little fix actually. That transaction is now actually being done. The little delay here with it showing our open positions, which will be fixed in a release today. So that transaction is executed, and there we go. Should appear there. So that's obviously that's suboptimal. That last piece of that trade, but that's the fix being deployed today. So we're generally
Yeah,
shipping, you know, upgrades
the
into
trade
prod.
was snappy though.
Yeah, well, it's a minor fix, and if I go to a different
Yeah.
branch and so forth, but anyway, so the point being is that experience should be, you know, as seamless as possible. You know, you want to close a
Hmm.
position, max. You know, I'll close the entire position,
Yeah, you made 6%.
and
Nice.
position should be shut, done. You know what I mean? So
Hmm.
trade's been done. Um, so that's really the sort of the base of efficient, robust execution for the users. And obviously, there's a fee there. That fee accrues to LPs, um, providers of capital to the LP pool. And there's, you know, some nice little features here, and you can track the skew between long shorts up the top right hand side. And you know, things like just allowing users to easily move between different markets, Aussie, CAD, Euro, Pound, USD,
Very
Yen.
user friendly.
Um, well, you know, I mean, I don't think
Yeah.
we were around in 2017, 2018 and various dApps and so forth. And I think we need to progress on from that. You know, I think we need to make it easy for people to do things. Convert, again, the intent is just to make it as easy as possible for people to do things on the to engage in activities with their assets. In this case, user wants to swap, WETH to FXUSD. Okay, well, let's just, one click. Lots of optimization going on now around speed and
Well, one of the features for this, right, is that when anyone, when they convert to the FX USDC, there's no swap fee, right, for minting the tokens?
there is a very small 4 bips for conversion USDC to FXUSD.
Oh, okay.
So there's a small fee. Yeah, not completely. We've got to pay the bills.
Yeah.
So in this particular case, I swapped some ETH into these are spot converts. Let's say I want to, quick convert across to euro. What there is there is no slippage. It's Oracle-based price conversions, so that just means that makes it much more efficient as compared to a Uniswap style, XYK model. Pros and cons on both, and people will sit there and argue all day about different, what's the most effective AMM, etc. But we think it serves its purpose really well. So in this case, I'm converting $11 worth of USD into euro at a rate of. That's just gone through, and if I go back to my dashboard, I should see here. I've got some FX euro sitting here, and let's going on a trip down under, and I need $5 to buy a coffee. Something going on there. Just refresh. Oh, there we go. So I'll just refresh that. So again, the intent, not always achieved, is to try to make this process as smooth and as easy as possible for people to engage in. And I guess every day we ship, we just tighten it a bit more, and it just gets
It's
better and better.
always it's always when you're trying to demonstrate when it wants to be slow for you. Every single
Exactly right.
time.
Yeah, that's the truth of it. So, but again, users should be able to convert across Euro, Aussie, a large number of different stable coins as well. Oh, there we go. So there's something, obviously some sort of RPC type delay issue going on there.
Yeah, no worries. I mean, you don't have to demonstrate every single feature if you just really want to talk about if you just want to give kind of a quick glance over, and then we can talk about some of your other things with your kind of how you built the financial infrastructure, and then I'm interested in your bridge and how that ties into security as well, because you guys have a lot of different security focuses that you have to
Vectors.
have. Yeah.
Yeah. No, it's a very well. This is an ongoing thing too. There's no, I don't know. There's exploits, and it's relentless, isn't it? So perhaps
Yeah.
rather than me talk generally, we built a bridge, and it'd probably be better to get the engineering guys to talk about the specifics of some of the security around that.
Mm-hmm.
But obviously, yeah, lots of moving parts, and I guess we try to move as rapidly and as slowly as possible, all at the same time. I guess what that means is we want to keep shipping and we want to keep moving forward, but we obviously need to be cognizant of just
You got to make sure you do the
there's no
things the
point.
right way,
There's no point blowing up. You know what I mean? So
Yeah.
yeah.
Okay, so all right, so then we'll get into some of the well, one for your earn pools, right? You want to talk about the pools that you guys are currently hosting, and I know you just launched, and I was going to talk a little bit about partnerships later, but you just launched on Demeter from Spirax, so I know that pool option's available, and that's got pretty nice APRs right now too.
Yeah. So it's a liquidity is a funny thing. There's some protocols have launched and incentivized, huge number of pools across a huge number of AMMs. Some haven't, and we've thought long and hard about, why do you need liquidity? What do you want to achieve? What's the end game here? And there are a lot of different pools, a lot of different protocols where they've sort of allocated huge. I think I sort of alluded to that at the start. They've allocated large amounts of capital to pools that really don't get utilised. There's a bit of sort of window dressing on daily volumes each day, and it's a bit depressing. And and obviously they pad the returns with token issuance. And then you have liquidity pools like GMX's GLP, which has really strong utilisation, and therefore it generates a lot of fees and hashtag real yield, real and sustainable returns to LPs. So put a lot of thought into it, into the structure of our LPs, and with, I guess, improving our incentivizations over time. But I guess the point is, there's no point having a large pool if it's not getting used. And a pool really only needs to be large enough to meet the demand of the protocol at that time. At least that's our view. And our curve pools is small. It's got sort of, like you can see there, it's got about 310,000 US in it. But realistically, it only trades 10 to 20,000 per day right now. The Demeter pool's got about 135,000. And I don't have the volume figures on me today, but there's a balance, again, and what's the magic balance between what's a big enough pool to give comfort to users and investors, and what's a big enough pool to service the requirements of the protocol. And you don't want to spend. I think too many projects have spent too much of their emissions on liquidity for no end. Liquidity. What does it achieve? If we were to direct all of our emissions to liquidity in those two pools and they weren't utilised, and spent our entire rewards allocation on that, I don't think it would achieve what we want to achieve. I want us to focus on driving volume to trade and convert and borrow to generate real revenues to the protocol, to generate real fees, real yield, and pay, and actually sustainably pay LPs. So yeah, but there's the handle liquidity pool is you can see that there. That's the pool that provides the liquidity for the perps. We've got a curve FX USD, USDC, USDT pool, which gives users the capacity to switch between our USD stablecoin and USDC and T. We had thought about doing a Frax base pool, which Frax is awesome, and that's possibly something we could explore. And you have the Demeter Uni V3 pool as well, which was a partnership with the Spirax guys, and that allows us obviously to double the token, the rewards to that pool, which allows us to get a little bit more capital and larger again. And we're on Uni V3, which is a good thing as well. So we effectively have USD liquidity on Uni V3 and Curve, which then brings us into play with some of the aggregators and and routing, and gives us sort of more usage of those pools. We also have, when we built this a long time ago, Liquidity were just sort of launching as well, and I guess there were parts of their model that we really liked as well around their stability pools or their keeper pools. So we have single-sided multi-currency staking in what we call our FX keeper pools, and these pools are the pools that fund the liquidations of any under-collateralized vaults. And effectively, I guess it means there's not a bot race to liquidate vaults that fall into the liquidation parameters. It's democratized. We see it as democratized access to liquidation profits.
Okay.
And so it's really, as a user, you can deposit single-sided currency into those pools, and that is the pool that preferentially liquidates under collateralized CDPs. If there's not sufficient capital in that pool to liquidate, then it becomes a public auction for the liquidation. And obviously they're small at the moment, as you can see.
Yeah. And then
but
that's cool.
Time will change. Yeah.
Yeah. So with some of the other kind of token things here, that brought something up for me for a second there. Hold on, what was I looking at? Your with the redeem, right? So I got a couple questions there. It made me think of it. I was kind of thinking through some of your token things. So users have to maintain a certain C ratio, right? And then when they and they get that, they mint their FX tokens, right? And they go to redeem and those tokens get burned. And so I'm kind of tying this all into like a bit of a total, a bit of a token ecosystem kind of question here. Sorry, it's getting a little long-winded. I don't usually do this. You're going to have 420 million at launch, 2.1%. Inflation rate. Does that mean every year you're minting 420 million plus the 2.1%? And then how does the burn ratio keep that utilization or that token amount down? Sorry, that was very long-winded.
Yeah, it's a great it's a great question. It's almost a bygone era where people cared about that stuff. 2 years ago. Yeah, so effectively the intent was 420 million as as the initial mint with a 2.1 inflation to really just to fund an ongoing rewards for the hope was by the time we got to that point that there would mostly be sufficient yield and usage that we could pay for liquidity, that sort of thing, and that not necessarily emissions or inflation was required. So we haven't got anywhere near that point, and I guess the reality is if we get to that part of the schedule, we'll decide, as a DAO, as a group, whether or not the emission schedule should be enacted or not. And how does that link to burn? Well, the intent is to use protocol fees to buy and distribute Forex tokens or buy and burn Forex tokens. And it's a little bit up in the air because there's a lot of, it's not always straightforward. Should you buy and burn? Should you buy and distribute? Are there regulatory issues around buy and burn versus buy and distribute? It's really quite a complex topic. So I'm not trying to not give you an answer, but it's a little bit up in the air, is the honest response.
Yeah, I mean, no, that is the answer. I mean, that's, you guys have thought to a certain point, and you got to, see what's feasible in the current environment when you reach that point. So it makes sense to me.
I mean, and obviously, I think it's really important to. I think there's a lot of an illusion of certainty around this stuff that people portray, and the truth is a lot of these things are unknown. Where's the regulatory landscape going to land? What's going to happen in 2 years' time, and so forth. And I guess we just choose to move forward with. We know it's good intent, but we can only illustrate that to people by doing what we do, which is building and delivering and being consistent. And being here and trying not to, make stuff up or overhype, and just keep delivering and delivering. And we think that building from that foundation over time, we're just going to get more and more sort of supporters and hopefully traction. Maybe crypto's just, maybe everybody just wants the latest, the latest shiny thing. But we'll see.
Yeah, I mean, I kind of get the vibe that people are starting to look for, yes, maybe the shiniest thing, but the shiniest thing that's going to perform long term. So, those two things I think are starting to go hand in hand. If it's shiny,
so.
If it's shiny, that means it's going to perform, and that's why it's shiny currently.
Yeah.
So then, okay, so what was I? Let's see here. All right, so for the end user here, right? So what I kind of wanted to kind of get a wrap around is how can a user benefit the most from the project, right? Like, so you guys have a bunch of different things. You've got referral programs, user rebate rewards. They get a percentage of, or they get like 100% of whatever the arbitrage profit was from certain things. So like, what are the ultimate benefits here, and how can a user maximize all that?
Yeah, well, I guess, and the answer to that is it depends on the user and what their skills and what they are. I mean, as a trader, we hope to deliver you value, markets, efficient pricing for FX markets, a really easy to use trading experience, and so therefore, increase your probability of actually profiting from your personal alpha, your personal strategies. But as an incentive for you to trade with us right now, for example, we are to non-referred users. We're rebating 80% of any trade fees back to them as forex. So basically, as you trade, you will see this forex balance accrue over time, and it's equivalent to 80% of any fees you pay on trades and converts, and that can be claimed anytime. Click on claim, and
Yeah,
the transaction
80% back.
that'll be.
That's outstanding.
Well, I mean, we need, as sort of, I think the thing comes back to, we've done a lot of building. Now we need a lot of customers, users. We want people to support us. We want people to like what we do and tell others about it. So that's a cost. See, to me, that's a much smarter way to use our reward schemes and incentive schemes than just paying for unused TVL.
Yeah,
for example.
I can't disagree with that.
That's, for example, you'll see that balance up there now is 0. That's because tokens are claimed and sitting now. You'll see them sitting here. So that 47 is now in my wallet. Which if I feel like it, if I feel so inclined, I can then go and deposit them here into into our VE Forex and lock them, or I can sell them, or do whatever I want to do with those. There's no vesting. Pros and cons to that, but I could lock them for a week, etc. And this is effectively giving me some VE Forex, which the VE Forex owners really are the sort of the gold class citizens in the ecosystem, because they're the ones that get the voting rights. They're the ones that get any gauge direction rights if they exist. They're the ones that will get any fee distributions when they occur, so on and so forth. So, that's what I can do with my 47 Forex that I earned through trading or converting on the platform.
Yeah, and then there's also a boost, right? A boost for V4X lockers.
Correct. So V4X lockers receive boosts on. I mean, these pool APRs are pretty low at the moment, again, but anywhere between. And this is really Curve. I mean, hats sort of tip to the Curve guys. This is analogous to what Curve have done. Obviously, V Curve, and then a lot of other projects have used it as well. You've got VFrax and tons of them. But so conceptually, you can get anywhere from a lower bound APR to a higher bound APR on that particular pool. Same applies here. 5.4 to 13.51, depending upon how many V4X you own as well. But yeah, so as a trader, how do you benefit? Well, you benefit through access to global FX markets. You benefit through efficient pricing. You benefit through efficient execution, and hopefully over time we've got a whole lot of stuff we'll be rolling out around sort of, I guess, alpha generation and idea generation to help people try to find opportunities in those markets. As a person using Convert, it's not just stablecoins, by the way. It's we've basically built it so that users can convert. The intent is to convert from any ERC20 on Arbitrum to you may be living in Europe and want to sell your GMX back to euro. So the point is you can be on this use our routing and pretty easily just flick your GMX back to handle euro or handle pound or etc., or USD too, of course.
Nice. Yeah, that's a good
and so again, it just, the objective is to allow people to settle in their own currency. That's one of. Settle back to your own currency, and obviously you earn the rewards. Also, so on the rebate and reward scheme, so non-referred users receive 80% of the trade fee rebated as Forex. Referred users actually at this point in time will receive 100% of the trade fee rebated as Forex, and the referrer will receive 50% of the trade fee paid back to them as Forex. So therefore, if you want to earn from the protocol, refer lots of users and get a cut of their fees. It's just the simple. Yeah. That's the simple one. And yes, you're earning Forex, but again, we think that's a highly efficient use of our token incentive and rewards allocation, because then we get utilization. And when we get utilization, we get high APRs on the pools. All these APRs will, should realistically, move into attractive territories, And as utilization grows, we'll also be driving more volume to the pools to meet it. So but right now we're just not meeting. We don't have sufficient utilization to be spending tokens on unused TVL. It just doesn't make any. I don't think it makes sense anyway.
Yeah, I agree. So, I mean, I think you guys, have a lot of, great incentives and like this is well structured. Um, but I do want to ask about one thing, right? Because this is something that, you see a lot in DeFi protocols is people talk about the team fees, right? So currently you have 22% going to the team, and some people say that's high, some people say that's just right. But what are you guys kind of using the team fees for? And then what's really your answer to people who might think that's too high and would be deterred just from looking at that number?
I don't think it's it's sort of a little bit of a tried answer. It's not our opinion. It's too high, and if we're dedicating our life and our time to building this protocol, I think 20% out of 100 for something that we work on, 80 to 100 hours per week is completely reasonable return. Otherwise, why would you bother? Honestly, that's sort of little, like I think there needs to be incentives for founders to stick to a project, to build it, at the end to benefit from it. So I don't know. I mean, what should we do it for? 10%, 5%? You know what I mean? Like I don't know. It's I think there
Yeah,
needs
I
to be
I mean, I'm
there's
not
got
a
to be a carrot
developer, so
for us.
yeah, I'm not a developer. I've never put the man hours into this. But I see how long some of that takes, and so, I, who am I to tell someone what a low number is? But
Uh,
yeah, you do
uh,
kind of see that argument around where people are shied away from a project who wants more than 15%. So it's
oh yeah,
kind of
well then I guess we miss out on those people because I don't. I mean, we just don't agree with that position. Like
yeah.
I
Hey, you got
think
to know
that
I mean, you know your value better than anyone else. So
I think a founder of a company, let's in TradFi, we're like traditional company starts with 100%, and the smart guys dilute themselves down to maybe 20. Sorry, might dilute themselves down to 50%. 40, 30%. At the end of the the various capital, seed A, B, C, and so forth, right? So
mhm.
so where's a reasonable number for a team to be motivated to continue to work on a project? So I guess it's a difficult question to answer. Um,
Yeah.
but if somebody's sort of put off, by a 20% versus a 15%, then I don't think we can really, I'm sorry. What can I do? We're not the
Yeah, it's
project for you.
totally. Yeah, totally
You know.
fair. And I mean, plus you guys have your stuff vested, right? So it's not just like it's some pump and dump kind of thing. Um,
Well, well, okay, there's a few things on that. It's this we people can see and look, that this has been around. We have been building this actively and diligently for a period of long period of time now, too long. One. Secondly, they're all subject to vesting, and team haven't sold. But I just think it's wrong. I don't agree with this DeFi perspective where team can't sell, team can't earn a reasonable return from a project that they're building.
mhm.
Why else would people do it? We all want to give and build things that are useful, but we also should want to reap rewards from our hard efforts and work, and and that's quite different, obviously, yeah, from pump, dump, rip. You know what I mean?
Mhm.
Take too many tokens, pump a pool to, ramp it, take it's it, that because I think that's not the game we're playing, and it's not the game, but we've shown we're not playing that game. Hopefully, sort of reasonable people will see that, and I don't know, like is it again? Should it be 18? Should it be 22? Should it be 15? There's sort of semantics around numbers, isn't it? That's sort of about the number we chose, and we thought that sounded about reasonable, and it was sort of market accepted at the time. Um, and yeah, that's sort of where it's landed.
Yeah, I mean, hey, I don't disagree with your response at all. Um, I like to I really haven't asked that question too many times. I've only seen it kind of recently become a huge concern. But the reason that I ask is not because I'm here to tell a team like how much they're worth. Is I just kind of like to hear, what your principles are, right? And you get a great sense of a team's principles and their values when you ask them, what they're worth, kind of thing. And so
Yeah,
it
I
just
think
gives.
it's completely reasonable. I completely
Okay.
agree. And I guess I don't. I think it's an impossible question to answer. I think that you need to look at, as you've said, the team principles and what they've delivered. And I think we've, the proof of the pudding's in the eating. And I think that we are delivering certainly diligently and consistently, and trying to build something that makes sense, and trying to add some value to both DeFi, the broader ecosystem, to Arbitrum, to the users. The whole thing. So I think that we've certainly shown our bona fides as far as that goes, and hopefully we're useful to people. And we want people to use our protocol, make money, succeed. It be a useful part of their day. So we put a lot of blood, sweat, and tears into this. Not a lot of copy pasta forking going on here.
Yeah, I'm excited. Honestly, I'm happy to be able to talk to you and help spread the word. I think you guys have built a pretty great platform, and are doing some great things and have really done it the right way. So, um, I'm excited to help you get the word out there so that people can come and get exposed to forex trading and kind of get away from that stigma that forex trading holds in some communities. Where people say they don't trust it, but you just brought a trustable way for people to do it. So,
Well, yeah, trading's difficult no matter what asset you're trading. Whether it be
mhm.
ETH, BTC, or and so forth. And I'd probably argue. I mean, if my argument is FX trading is a lot less subject to manipulation than most crypto trading.
Yep.
You've seen some
Yeah,
of the
that's
some of
why.
the price games that are, yeah. So, but that's a big discussion.
Yeah, and it is. I agree. And I have been, nothing but, happy with the different type of forex funds that I have invested in. And it is significantly less subject to manipulation. I've seen that. So I think getting an understanding of that to a wider variety of people will really help drive people to see the value in it.
Yeah, and I mean, we hope over time as we build this out that this will be a tool that's not just a trading tool. It's a tool if you want to create some liquidity against some of your assets, initially ETH, you can simply turn up, supply some assets here. Borrow 100 AUD, for example, supply that asset, borrow that, go across to the dashboard. If you want, you can send it to a friend. You know, uh, so there's a lot of other sort of function, multi layers of functionality built into what we've done here, not just simply, buy sell yen, but so um, you could borrow some Aussie dollars to send to a friend. You could convert it to, across to USDC if you wanted to do that, quickly and efficiently. You could um, reasonably quickly, highly efficiently. Um, Something's very slow today. I'm not quite sure what's going on there, but effectively, quickly convert, at an efficient rate, or uh, again, very easily borrow some euro and contribute that into HLP, as a liquidity provider as well. So yeah, again, just all about trying to find ways to add value to people, participants.
Yeah, I mean, you got a lot of great features in one place. So I think it's a really great product that you guys have put together.
Well, let's hope the users think so. Hey,
Yeah, I mean that's the
yeah,
ultimate test. But hey, you're doing what you need to do,
yeah,
starting to spread the word. So
yeah. Cool. Is any more? I guess should we? Any questions or what?
no,
Any other
that
questions?
kind of some of the questions you answered earlier when you talked about things at the very beginning, and so I just kind of pick and choose my questions as the conversation goes, and I think we've covered pretty much everything that I really wanted to talk about. I mean, I'd like to give you, of course, the last parting words here for anything you'd like to put out there to anyone who's listening.
Oh well, nothing specifically. I mean, a big thank you for inviting us. So thanks for taking the time. We're just here actively building and now trying to spread the word. We're always open to feedback, input, suggestions. We do the best we can with what we know and think and can design. But if anybody always wants to get involved, help us grow the user base, I think we've got really generous incentive programs in place right now to get more users, and we hopefully that will then translate to really good APRs across some of these LPs. Yeah, so if you're interested, just get involved. Uh, content content builders, content providers. We're really open to just engaging with as many people as possible to sort of grow and succeed and make it a win-win for everybody.
Yeah, I'm rooting for you. I'm looking forward to watching you guys grow, and I really appreciate you taking the time to come and talk with our community and spend your time with me. It
Yeah.
means a lot.
Thank you for having us, and thanks for the other guys that are here as well. Really appreciate you taking time out of your day to listen to listen to me and us. Thanks again.
Yeah, absolutely. All right, everybody. Thanks so
All the
much.
best. Signing
Oh,
out. Okay. So I'll work out how to sign out.
all right. Thanks, everybody. We really appreciate your time and support. This is an awesome AMA. Please go to handle.fi's socials and get involved with their community. If you're seeing this right now for the first time on YouTube, please hit that like and subscribe. We got a lot more coming for you. Thanks so much. See you next time.